Hi, in this video, we're going to talk about careers in venture capital and private equity, basically careers in early stage investing, and what are the core skill sets that are needed for somebody to build a successful career in these areas. So let's first understand how this segment is slightly different as compared to some of the other areas of financial services that we're looking at. Early stage investing has its own challenges and data points that kind of come up. What are those? Let's look at the spectrum of early stage investing. If you were to kind of break down the companies and the investment cycles in terms of the age of the company and the stages of investment, right at the beginning, you have something called as seed funding, right? As the company is starting, it's in an idea stage, founders are new, they'll come up with something called as seed funding. After this round, typically there is a round where high net worth individuals or individual investors come in and help the company out. This round is called as angel funding. Beyond the angel funding route, you have these venture capital and private equity entities coming in where we have these terms called as series A, B, C, and so on and so forth. There could be a lot of alphabetical characters that could follow, where you will have the venture capital and then finally the private equity guys coming in that order in general as per a conceptual framework. And then finally the company, if it goes and lists itself on a exchange, that will be the IPO stage, right? So that's the spectrum in terms of how you go about right from the beginning of a company, a startup phase, going all the way up to a successful listing of a company on stock exchanges, right? The seed round is obviously the smallest one, followed by angel, then followed by VC and PE. The lines between the VC and PE segments are a little bit blurred because, typically there's no clear demarcation of what size would you call a firm as a VC fund or a PE fund. Usually your global PE funds invest in larger deals where you have kind of well-established firms who are present, and in those, there is some kind of investment that is happening. VCs typically are at late stage, growth stage, startup phase where, the product is in place, the market is in place, the company has kind of identified the product market fit, and now needs capital to grow faster in that area. So that's where VCs kind of come into the picture. Now, when you look at this early stage investing in terms of both VC and PE investing, essentially there are some core traits that are there. From a student perspective, what we do need to understand is that these are difficult segments for freshers to get into. Why? Because there are limited roles. There aren't too many registered VC or PE funds in India at this point of time. So the usual movement that happens is with a little bit of experience from investment banking or consulting domains, right? So people who have worked for a couple of years in investment banking and consulting domain find it easier to get into the VCPE industry as they kind of go along. Some of the major names that you will come across in this domain would include the likes of Axel, Sequoia, A91, True North, Matrix, India Quotient, Bloom Ventures. There would be a host of others as well. Now think about what kind of skill set would be necessary if somebody would be building a career in these areas. Remember, these are funds which are investing in early stage startups, right? At this point, there are no financials or detailed financials at least. Companies may be at a stage where they're not making profits for a fair bit of time. So when you try to do the conventional valuation methodologies that come here, they don't really work well because you don't have earnings. You don't have cash flows probably. So you can't do a DCF valuation or you can't go about doing a relative valuation exercise at this stage. A lot of the valuation at this stage depends on the execution capability of the founders, and that is what a VC or a PE fund has to kind of focus on, right? Less so in PE because by then the companies are mature, but a VC fund definitely has to look at what kind of execution capability the founder has, what kind of market size the company has, what kind of industry the company is operating into. So all of those become sort of core areas that you're looking at when you're looking at a VC investing. Now think about what could be the core skill sets that would be needed. It is imperative, just like equity research, that you do a lot of analysis around the industry and the company. Here there aren't too many macro traits that play out. You're going to pick up one particular industry and then go deeper into that, trying to understand what's really playing out there. What could potentially be, the growth drivers for that particular industry? What would result in significant valuation games playing out in that industry over a period of time? So a very keen understanding of what's the industry, what's the company that has to kind of play out. You have to understand valuation concepts which are specific to industries. And remember, these are not concepts that you will use in the conventional sense. You're probably looking at, okay, if you're looking at retail or e-tailing essentially, then you're looking at gross merchandise value. If you're looking at an internet company, you're probably looking at subscribers who are there or what value they are giving to the company on a continuous basis. The concepts related to emerging trends in the markets are very important because most of these new age firms these days are driven by technology. So you need to understand what's really coming up in terms of emerging trends. That becomes a core skill set as well in terms of the understanding. And of course, needless to say, like almost all major segments of finance, you will need a good understanding of Excel as well. There's a small difference, however, in this segment of early investing versus, let's say, public market investing, and that's a very core difference in terms of these hats that somebody wears when they're looking at investments in either an unlisted firm or a listed firm. When you look at a listed firm, typically these are firms that have been in place for a while, and so there is enough data which is available with respect to these firms that allows you to dig deeper. And consequently, the hat of a skeptic is usually better when you are looking at publicly listed entities. With unlisted firms or startups, however, there isn't too much data. If you are too skeptical of their business, you will probably never look at investing in them. So, in a sense, VC and PE investing requires, in addition to an understanding of looking at what trends are, making projections and thinking about what would be the future of a particular industry be like. In addition to all of that, you will still need to take a leap of faith, and that is a core skill, that the ability of how do you judge a founder, how do you judge the execution ability of a founder, the capability of a founder or a founding team to be able to execute the vision that a company has set out with. That to me is one of the core skills that you would need in the VCPE space, in addition to the other core domain specific skills that are needed. Once again, to reiterate, the number of jobs here are limited, skill sets are non-negotiable once again, and the movement typically happens from investment banking and consulting domains towards these areas as we look at them. That's broadly it from me in this particular video. Thank you.